America, Daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play option. Omega, you're trading home, where every move makes you feel less alone.
Good morning, everybody.
Happy Monday.
Good morning, Troy. Good morning, Matt. Good morning, everybody. Happy Monday. Yeah.
Listen,
Monday,
Mark.
Did
Go
you
ahead,
notice the time of the year? The bugs are. I mean, we're in Tennessee. The bugs are starting to make themselves welcome.
Yeah.
And starting to check for ticks and all those different types of things. But
yeah,
hey, we'll take it.
Matt, we have these things in Tennessee. I don't know if you guys have it in Indianapolis. Mosquitoes.
Oh, I've seen this before. I have seen this before.
I don't know if it's the same.
We usually spray our yard with that, have a company come with that magic garlic smelling, kill all the mosquitoes naturally thing. But I think my plan this year, I should try to get a bunch of bats. Because have you seen the numbers on how many mosquitoes a bat eats? And bat boxes, I mean, how cool would it be to have some bat boxes in the backyard? So
you make it interesting. I didn't even know till I was walking with my son Michael the other day, and there was like 3-4 bats. And I was thinking to myself, what's their usefulness? But you just mentioned that. They kill the bugs. Troy, did you notice in Tennessee yesterday? I don't know if it was like annual spray day. I can't tell you how many neighbors with the packs on their back are walking around like very determined with the chemicals. And it's like, I'm like, you're all spraying at the same time. I'm going to sit here for a little bit, let the air clear a little bit.
Yeah, I have lost all sense of smell through the years. So I'm golden, or I'm in trouble, depending on. It's important, but listen, guys, markets are in turmoil. Markets are in turmoil.
Well, I mean, Friday afternoon we get winding down the week, putting some spreadsheets together, and then I see some chatter on the Discord, and they're like, big move, what happened? And this debt downgrade came out at the end of the day, Friday, the end of the business day, but after the market hours had kind of closed as things were wrapping up. And so markets in turmoil, Troy, spicy move.
Do you really think that, you think, I get it, a catalyst. And I mean, it's like, and I want to get Matt and Troy's opinion on, I don't understand totally the whole, this debt thing is not like it started last week. It's been going on a while.
Right. Just a couple decades.
I just look at a catalyst. Forget just for a second the debt thing that came out on Sunday. I get it. How much have we been up? Last week, S&P's up 5%. Right. Add on the 2 or 3 weeks before. It could have been the Chicago Cubs losing a few games or whatever. We need the market to go. I mean, this is getting unhealthy. How many? What have we been up like? 13 of the last 17 days.
Wasn't it just last week? What did we gap up last week? Weren't we up 3% on Monday? Am I remembering that
Monday,
wrong?
Friday, Monday, a week ago.
That was a week ago. We were up like 3% on the open.
Oh, it's insane. So like
2%. I mean, we finished up 3% or whatever.
Yeah. So a 1% move after we've dropped 7 or 8% in a month. People are freaking out. And do either of you, I mean, what would you put if you look at this Fed thing? What does it mean for I mean, obviously many trillion, and I'm not sure I could even hit enough zeros on a calculator to get it, but what does that mean? I mean, I saw the response by Bessant. Is that his name? Bessant. Yeah. And he said that, obviously he just blamed, okay, it was the previous administration and blah, 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 blah. And they're a lagging indicator. What's your thoughts on, is this mean much?
Troy, what do you think?
I'll let you go first.
Well, I mean, There's the two biggest credit agencies that have the most headlines are Moody's and S&P. And I mean, I kind of feel like the debt thing is it's the elephant in the room. I mean, it's been talked about my whole lifetime, and this is the US national debt, which is owed to a variety of debtors, foreign companies, foreign countries. It's owed to the US itself. It's very complicated. And I mean, the debt has just been spiraling out of control for a long time. It's caused by the US having a budget deficit every year. So the debt never gets paid down. It just keeps growing. The interest rate is high enough that the interest rate on the debt is becoming a huge factor. And, you know, we're in a timeline where what's mattered for, you know, a lot of the history of the world as far as nations and their sovereignty and their money printing. I mean, we've been at a kind of an unsustainable debt level my whole life. So this is a headline of something that I think most people with a calculator would agree with.
Does it make it worse that is this correct if I read, does it make it worse that if there's less demand from China, if these guys are ticked off with the tariff stuff, if there's less demand from them to buy it, does that make it worse? What do you think? Or does that have anything to do with it?
I think the main problem of it is just interest rates. We talked about this last week. The interest rates are just ticking higher in the midst of even this rally. And I'm not smart enough to know how all this connects, but I do know that when you have bad credit, your interest rates go up. And I think that's a similar thing for the country. And so I think the big catalyst, like I honestly think compared to tariffs, this is exponentially a bigger issue and could lead to a much deeper crash, is if we suddenly spike over 5% on the 10-year.
Where are we at now, Troy? Are we close?
Oh, let's see here. Let's go to our trusty. I mean, we're at 455.
Okay, so 5 might be the scare. The
5 has historically been historically we used to have 7% interest rates when we were healthier, but because of a debt environment, the amount of debt we have, I think 5 is a scary point for people. And so there's been talks out there that, you know, if there's certain banks that like their debt load, they can't go past 7 or else without stuff breaking really bad. And so I think when you have that much debt, you know, and it's a variable interest rate as these things are, you know, the higher it goes, things just start breaking. And so I think that's I mean, people love talking about hotel hedging and predicting the future. I'm not really good at either, but I will say, I think that is the big one. Like when you see rates start climbing, that's in my mind when you should probably have puts.
Can I tell you one other quick thing I was thinking of over the weekend? You know, looking at VIX, I know Troy looks at VIX. I look at VIX. I love looking at VIX
all day long.
All day, yeah, and I do too.
I have a poster of VIX in my room.
Well, you know what, and that's about one of the only things I trust. But I was thinking about this as I was going for a coffee today. Usually, I have some of my best thoughts, not best, but I have thoughts. When I'm going, when I have coffee and I can activate the thought.
Yeah, I get that.
But you think about when VIX hit 17 Friday. I mean, most people would say, yeah, we still got stuff going on. 17, you know, I was saying Friday, maybe 16. I just didn't see any reason, 12 or 15. But you think about what that means on the other part of it. If you're really saying 17 is the low for the next month or two, right? You're saying where the market's going to a degree, right? You're saying the market's probably going down. It doesn't mean it can't go up a little bit, but it's like we don't talk enough about, or we don't verbalize enough about, well, if you're saying VIX is low, you know, and you believe that, and I believe that a lot stronger than I know which way the market's going, but it also means the market's going a particular direction, at least to set up some downside positions. Because wouldn't you try it at 17? Were you thinking of setting up some kind of tail stuff? Now, I say that knowing that, Matt, I say that knowingly, like, Troy, were you thinking about it? I already know the next answer. The next answer is, Dan, I did, or I already did, or well, how would that be correct?
Yeah, no, I mean, I think in general, as a general rule, like the lower the VIX, the more confident you can have in owning tail protection. Because it's cheaper.
That's right.
To inventory. Matt and I've talked about this. I am a firm believer that one of the reasons it's so hard to backtest tails, you can backtest tail hedging, and there are tests that work, but one of the reasons it's so difficult is every vol expansion is different.
That's right.
And so this one, normally if you're at a 22 VIX, you're not suddenly going to 40 starting from 22 or going to 60 starting from 22. Well, that's what happened on Liberation Day because we were already in a high vol environment because of the uncertainty of it. And so I know people might not have, but if you have a test that, you put at 12 VIX is when you load the boat, you missed it. And so it's that balancing act of trying to have something on without, I think of it in terms of inventory. It's like you have a bunch of inventory. What's it costing you to carry every day?
That's right.
And can you live with that? And that's the main.
Great point.
Yeah, you got to scale. I think you have to scale. I mean, it was like when it hit 17.
Yeah,
I bought a few call vertical debit spreads, maybe 50, 60 days out because, I've seen it before. It's the old thing. VIX can stay in the lower end of the range a lot longer than it can stay in the higher end of the range generally, right? Because the markets go down fast and furious and then VIX will come down. It doesn't stay up as long, but it can, how many times, I've got burned on doing like 30 wide buy calls or buy call verticals in VIX and I run out of time and then it goes down. Or
that's exactly.
So if you go 60 days, so like Friday I started small, always too small. But you scale in a little bit buying it because I think 17 is a good spot to start, right? More than a good spot, I think.
Yeah.
Because, and if we go to 12, well be it. But I think that's kind of the approach because things can stay low vol more than they can stay high vol. But we'll see.
Well, and hopefully we have more beautiful times ahead of us to be able to talk about how we're playing all the vol stuff. That's my goal. I mean, I'll say just real quick, and then we should move to DCs. I said this last week, like most of the money I've made this year in trading came from like a 2-week period of Liberation Day. Everything after that, I've really just been paying for my inventory. Like any upward moving, it's like I'm almost doing the reverse of what everybody else does. I'm just reversing. I'm just hedging to the upside.
Troy, it feels like there's a week worth of back tests related to this. The Matty Ice. It's just all I'll say, but positive expectancy tests that can pay for a hedge here and there.
Yeah, for sure. So and the way like when vol was high, the way I pay for that just is I will do like a contango or a backwardation trade of futures to pay because I don't if VIX is at 40, but you don't want to sell everything you have because you actually think VIX could go to 80. How do you carry that every day without bleeding? And there's ways to do it, but it's really, really difficult. So
well, I liked real quick. I loved the way you did the reverse calendar, like a reverse diagonal.
Yeah.
That's as good as a trade.
Dan, my goal is just to not immediately lose that 1 month afterwards. I did it. I've been able to not lose it, but that's your fear with this stuff. Anyway, listen, it's DC week. So real quick, let's talk about what we're doing here. Matt, what do we call it? I call it the small account challenge. Matt,
the SAC, small account challenge, because we love abbreviations.
SAC.
The SAC. Yeah, small account. I'm gonna keep saying small account challenge because, but people refer to it. And last week we looked at long gamma trades. So we looked at straddles mostly, I think, and we ended up with a nice little Rick. At the end of the week. Shout out to Jeku and Steven again. So this week we talked about we want to be able to not just have one trade. We want a new trader, 5,000 in the account, we want them to have an amount of trades that they can put on, let the numbers play out in their favor, and feel confident that one trade isn't going to sink them. We want them to not be able to have to think about every trade, right? And so we're going to be looking, and last week we did one trade that we iterated all week. This week we're going to do it different because Option Omega is known for their DCs, like the wine cellar at Fogo de Chao. We have a varied amount of age and duration DCs in our arsenal. And so we're going to look at that. And so today, let me get to it real quick here. We are going to go with something that Mr. Matt came up with. I introduced you Matt's Monday Magic Trade.
Okay. Here
Matt,
we go.
What is this magic trade that you speak of?
Okay. So this is a 2-4 double calendar. And so just a quick and dirty talk through the terminology. When we say 2-4, we're talking about the DTE. So you are selling 2 days, buying 4 days, and it's calendarized. So it's a time spread. So you're doing this both with puts and calls, both at 20 delta. And the idea is that the puts and the calls will be the same strike. So in essentially what you're playing is the time. So you enter this trade Monday afternoon, and then you exit it on Wednesday. And the exit parameter is simply an early exit for time, and it is simply a leg exit on deltas. So I think, are we going to model DCs today, Troy, or is that maybe a different day? Where
we'll do it another day. We'll do it maybe tomorrow.
Just to quickly, the DCs, the way they're very complicated, but to simplify them, where they are most profitable is later in the trade when you're nearest the strike. So the idea is that the short premium has burned off of the short strike, and then your long premium is at high value because it's near your long strike. And so that's this trade. It is both, it is simple, but it is not easy. And because we're doing the SAC, it is capped at 1 contract per trade. Again, that's just because we're doing the SAC. You can uncap this and play around with it. We'll share the link. Because there's no profit target, because there's no stop loss, you're simply using the deltas and the time to exit. We do have Punisher on there. We have a penny of exit slippage and a penny of entry slippage. So it's going to make both your entry and your exit a little bit worse. And we've got fees on there. We've just got $1 for opening, which would, you could do 50 cents on each. There are people who trade these in low cost brokers where their commissions and fees are significantly lower. So if you do run this trade with like 20 cents on the entry and exit, which is certainly available on some brokers, you will see it impact the trade, especially because it is a QQQ trade. So so just a couple notes. And yes, as you can see, we've got it running since dailies. That's the other thing. So we're at 22, 23, and 24. So we've got 3 years of data here.
Yes, and the deltas are, so you start with a 20 delta DC either direction, right? The short and the put. The put and the call are 20 delta, the shorts of them. And you are exiting when one of those goes to 70. According to what it is. So if you get to short 70, negative 70 deltas, and with the put, if you get above 70 delta. Now you think, well, that means it's in the money, right? Well, yes, but with DCs, you it's okay. Dan, you could speak to this a million times better than we can. Sometimes it's okay to be in the money a little bit with a DC.
Yes, I a little bit in the money. A couple quick points. you have to look, if you want it in, would I rather it be in the money early in the trade or late in the trade? Late in the trade.
All day, 100%.
All day. And the other thing, if you said, do you mind it being in the money when VIX is 40? Go for it. We've got 1 million points to the short strike.
Yes.
But if you said to me at 16 VIX, do we want it being way in the money, on the upside? No, my friend. Right. So I think there's a little bit of context in terms of,
for sure,
the pain of these double calendars. It's like if it hits, you would think, is it okay if it goes to the short strike? But if you look at a DC, if this 2-4 and you do the double calendar and it hits the short strike 1 hour into the trade,
yes,
your P&L will be down. And
yes.
Well, this is exactly where I want it. But it's like having your mother-in-law over a month early from Christmas. And I love my mother, but having over too early. And I think I don't want it hitting my short strike in a 2-4 1 hour into the trading. Now, if it does it day, if this is a Wednesday, Friday trade, right? So if it hits it, Friday, fine. I'm so excited. So I think understanding that also will keep people from getting frustrated because it's like, oh, this stinks. I'm at the short strike. I'm down.
Yep.
I'm down 18% already. What should I do? Well, I think would you agree me?
Can I speak to that just for a second? Because there's this topic on DCs has gotten so much digital ink in our community. It's really important to talk about and to understand is allowing DCs to go in the money and how far you allow them is a discussion that needs to take into consideration what is the volatility environment,
right,
and what is the time.
Mm-hmm.
So there are people who have stories on the Option Omega Discord, and we tried this on August 5th when we had Volzo. I know people that tried it that had never done it. It is possible to pay a debit for a DC and have to pay a debit to exit. And on August 5th, the inverse, I know somebody who entered a DC for a credit that was deep in the money. And the vol environment matters a lot. So a month ago, when we were having these huge 2-3% moves every day, I had DCs that were pretty deep in the money that were over 100% profit. And why is that?
Wow.
It's because of the vol environment. When VIX is 40 or 50, it's a totally different discussion than when VIX is 12. So the vol environment and really these are advanced trades. Like these are not simple trades, and there's so much to talk about, not to talk about all of it on day one, but one of the things that's super interesting about this, Troy has done an awesome job of putting together this idea of the small account challenge, and QQQ is a different vehicle to trade this than SPX. One of the key differences is that in the Qs, there's assignment, and the brokers take a different approach towards a calendar, a time spread, a diagonal, a double calendar on a vessel that can be on a vehicle that can be assigned than they do on one that cannot be assigned. And that may be contradictory to what you think, but if you let an SPX time spread go super deep in the money and then vol environment is not in your favor, are you going to find a market maker that's going to bail out a trade that's 150 points deep in the money when VIX is 13?
Yeah. When you said money maker, I was thinking of
it was an accurate slip, right? So,
well, and the other thing, real quick, is this. Just simple as I was literally in awe when the VIX was 30-40, and I'm looking at the break evens of double calendars, and I'm like, that's from Tennessee. I can drive to, Utah or California. I mean, it's staggering. It's staggering when you consider what's the break evens of a trade when it's at 16, 17, like a Friday. And so, I mean, when the VIX is 30 and you're putting a double calendar, but here's the big one. If the vol stays up, it's like
sticky vol,
come after me. It's like you got so much room but there's that always, if the vol comes down, so I think just understanding that, you're right, makes someone with a mechanical back test relax a little bit. But if you don't understand that, then you're wigged out and you're like, oh my, I'm down 15% on my calendar after the first hour.
Right.
Oh my, Mr. Bill, remember that Mr. Bill? You guys remember Mr. Bill was a character. That's right. I keep thinking I'm with younger people here. I got to remember that. But I think that's a big, you don't want to go too much into all the information.
Yeah, we got it.
What your thoughts, because it is early and this is a small.
Can I say, in the risk of
challenge,
serving up too much of a yappuccino here, can I say one other thing about this, Troy, and what I like?
Yes.
Okay. I've been breaking a rule of the OO show host, which I've been backtesting during the show. And here's what is interesting about this backtest. Play with the times. Try different minutes. If you move this to 310 and 225, see what it does. Here's a spoiler alert. These are good back tests. There's a bunch of them. So just while we're doing this, so I changed the time to 310 and 225, same deltas. And I ran it back even farther and I uncapped it. So May 2021, which is kind of when QQQ added more expirations, that has a 10.3 capture rate. Okay. Very similar to what we have, 10.8 capture rate. Look at change the deltas. We go to a 25 delta at 310 and 225. 10.3% capture rate. You go to a 30 delta at 310 and 225, 6.6% capture rate. You go to a 15 delta at 310, 225, 11.3% capture rate. What do all these things have in common? They all have a positive capture rate. So the point I'm trying to make is these are not magic deltas. These are not magic minutes. This is a good concept to backtest. The blackout dates, the question from the chat, what are blackout dates? I'll have to check on this one. Troy, are these holidays? There's barely any.
Yeah, holidays, and in general, I was gonna save this to next week, but you guys are sharp. There have been people who have realized through time that you don't want to trade these necessarily on shortened weeks.
Yes.
So if there's a 4-day week, you don't want to trade these. It does weird things with vol. It shifts things around. And so people will just shut these off on short weeks. And so I don't know if that's the exact blackout. I can't remember, honestly. I was coding on the weekend, testing on the weekend. So it's always a dangerous game. But that's my bet, is it's probably holidays or shortened weeks. One more thing I'm going to say to this real quick. Last week we had people, because it's a small account challenge, people say, well, you're kind of going against your own philosophy, because you talk about in the community, you shouldn't cap things to 1 or cap things at 100 or cap things. Well, I've always actually kind of pushed back a little bit about that. I think it's completely appropriate to cap things as long as you're uncapping it when you test as well, because you want to get a broad knowledge base of it. And so if you're only going to trade, if you've got $5,000, guess what? It's okay to cap 1. I promise you. It's all right.
Yeah, and we can do a whole show. Agreed. There are pros and cons to both. It's not there are reasons to do both capped and uncapped.
Yes. And so let me give you the reason. But in general, you want to see what it would look like uncapped too. Like that's the beauty of it. It's just a button. Just hit the button again. It's all good.
We have a world-class back tester.
So but this is uncapped. If you can see.
Oh, geez. At 100%.
Yeah, this is 100%. So this is saying, hey, if you wanted to be stupid, you could do this and just trade this trade. Well, what this shows me is 2 things. A, it works. Mm-hmm. Like 100% is usually like the filter to say, like, all right, you've run this for 3 years and it works. So 2, realistically, it doesn't work, because you're not going to survive a 61% drawdown. So I don't care what you are. Now, this is advanced stuff. We'll talk about this later this week. One of the things about the small account challenge that I'm kind of hiding from you is that maybe even if you don't have a small account, you put $5,000 in an account and make it a small account, and then you truly do
idea.
forget these, and maybe you do say, hey, 50% a clip, baby. I don't care. I don't care to lose $5,000, and these are kind of like go getters, and so I'm just going to let them loose and go play. Well, you can.
Troy, you think about how many veteran traders should take that. If you took that approach, right, as a veteran trader and said, look I'm going to design strategies and trade them as if it was a $5,000 account, because what you're doing then is saying, to me, the most important thing by far, and surviving for a long time in option trade, it's all 100%. Risk management. So how can you avoid the drawdown, right? Because I can't tell you how many people I've lost to, why'd you stop trading, Phil? Well, I said, Phil, you were doing wonderful for a year and a half. Well, I had 2 or 3 bad losses, and I can't, you can't, it's the drawdown. Even though people will say I can handle it, the answer is you cannot handle it. Unless you have just such a pool of money that you've built up that you can do it. But what a wonderful idea that if a veteran trader could, when he's designing the risk management, look at it like a $5,000 account, because otherwise you're basically saying I can ignore drawdowns when I want to, right? And drawdown is real. Matt, I talked to Matt a couple times when he was in the midst of some, because he's pretty mechanical, and some days double calendars, and it's like, I remember one day I said, Matt, how'd you do it? It was like a $15 calendar. It's like, it's going pretty much out. But he wasn't twitching in the eyes or anything. He was cognizant. How do you?
So I think I've had him lose 70% this year. But again, they can. Okay, so you can have to pay a debit on them to close them if you have those situations. Crazy. So like these are, Troy. This week is going to be the week of weeks. I just have to hard pivot. I'm sorry, 2 minutes out. I literally have been breaking my rule just running back to us. Let me just share this for the whole concept. I picked 2 minutes at random, 351 and 227. I just picked minutes. And just to play around with this DC does not have a 10th side condition, which we'll talk about. And I changed the delta to 10, which is probably what most people would say is too low. And I ran it back from May 1st, 2021. And it has a higher capture rate than this. Now, I wouldn't trade that, but to the point that you guys just made, Troy, about starting an account with $5,000, baby, we're in the age of automation. How you could start a whole portfolio of trading a similar structure at different deltas in different times. And it's like we had cheesy jambalaya, low carb last night. Delicious. I can post the recipe. And like, it's just a sprinkle. I sprinkle a little Creole at the beginning when I'm making the andouille. Then like I sprinkle a little salt. I'm always over peppering it. Yeah. It's like you can sprinkle a 2-4 at 10 delta, maybe a little bit later in the day. You can sprinkle a 2-4 at 20 delta. You can maybe sprinkle a 2-4 at 30 delta. You run those all together in a portfolio, all at small size, and see what weeks. Some of them will lose all in the same week. Some of them may win all in the same week, and some of them may hedge each other. So it's an advanced concept on an advanced concept. But if you do the jambalaya right, it's really tasty.
Well, and Matt's, can you call me baby again one more time?
Me? You got a stew, baby. You got a jambalaya in Indiana, known for our jambalaya.
Did you say cheesy jambalaya?
So
wow,
keto.
Hopefully, you guys. So here's the deal. In closing, we're going to have different DCs for you all week, and basically, what we're going to have by the end of this small account challenge. Next week, we're going to be looking at theta trades. What you're going to have at the end of this is a slew of trades that are long gamma, long vega, long theta that you're just popping on that might seem to be all going against each other in some ways. But when you put them in a stew and you don't care about it because you've stayed small and you can trade with confidence, you've got a bunch of trades that are low sequence of risk, to Tom's point here in the chat, and you can feel good about it. And you can maybe, rather than have $100,000 in an account, worried to death about oversizing, maybe you say, well, I'm just doing the 5,000. I have a feeling, just personally, that if someone did this rather than focusing on their larger account, they would actually make more, there'd be more positive expectancy through time.
Absolutely.
And that's what Dan's taught for years.
Absolutely.
Dan's taught that for years. So,
yeah.
Guys, listen, it's exciting. There's a lot more DCs to be had.
Troy, have you noticed? Matt is not really that excited about the DC stuff.
I know.
He's just can't. He's not.
I need
Matt
to put on
really
my
excited
DC shirt this week.
And what's crazy about it is Matt's a Marvel guy.
I would pick Marvel over DC.
He's a
but when it
Marvel
comes
guy.
to DCs like this, he's suddenly Batman. So, listen, I love it, guys. We'll be safe. Be safe out there, surviving the interest rates. Remember, this is not financial advice, but for entertainment purposes, if we hit 5% on the 10-year, sell everything, sell your house, sell. No, this is not financial advice.
We hit it last fall. We were at 5%.
Yeah, for like 3 minutes.
Yes.
And that's my point. That's my point. Anyway, all right, guys. Yeah,
Sell Mortimer.
Go crazy, chat. I just posted another test. 10 delta. How does that work?
All right.
What?